How does the 25% tax-free lump sum from your pension work? So we've got this question here. Can you take 25% each financial year? So here's how it works. Let's work with some nice simple numbers. Imagine you've got £100,000 in your pension when you reach pensionable age, which is currently 55, about to go up to 57. And of that £100,000, 25% of it, let's say, is earmarked as tax-free income. Now, if when you hit that age, you say, I'd like that full tax-free income, please, they will transfer you £25,000. It does not count towards your personal allowance. It does not count towards any other income, and is not taxable in any way, shape, or form. Okay, so if you're still working, even if you're a super high earner, all of that £25,000 lands in your account with no tax liability whatsoever. What happens in the next financial year? Well, if you don't take any more, that £75,000 or whatever it's grown to or shrunk to is taxable income. So if you are still working, you'll be taxed at the rate that you're currently at. So if that's 20%, obviously you'll hit 20% tax. And now, depending on how much you take out, obviously we've got a few things to factor in here. If you're still working, though, just know that your marginal tax rate will apply to that income. Now, there's no national insurance on pensionable income, so it is just income tax at this stage. Now, in a scenario where you're not working at all, you still get entitled to the personal allowance. So let's say you're now 58 and you've taken the 25 grand the year before, you've got 75,000 left. If you took just 12,570, which is a current personal allowance, you would pay zero tax on it. And if you did that the following year, same again. Now, this assumes there is no other income, because any other income, even £1 more, that £1 would then be subject to 20% tax, or whatever those tax rates will be at that time. But as it currently stands, that would be 20% tax just on that £1 and anything above that, until you get to 50,270. So if you wanted to get it out tax efficiently and you could live off of £12,570, you could technically make that entire £100,000 be tax-free, but you would need to spread it out over the multiple years. So in answer to your question, that £75,000 on that second year, you can't then take 25% of that tax-free. All of that is now earmarked as taxable income. Imagine you've got a pie, okay, a quarter of it is tax-free, the rest of it is taxable no matter what, okay? That's how it works.